what's up everybody? It's your mortgage expert, Brian McCauley here. So you're looking to buy a house in Dallas, Texas, and you've been hearing about this new big, beautiful bill that has been passed, and you're wondering, what's in it for me? Does it help homeowners, existing, potential? What are tax implications, and what decisions should I take into consideration when trying to buy a house? Stick around in this video. I'm gonna unpack the BBB and let you know what's in it for you. Let's get into it. As people continue to decide whether or not to buy in 25, are interest rates going to come down? Consumers are looking for every deciding factor that's in their favor in order to buy a house, whether that be prices of homes, interest rates coming down, can I get some seller concessions? But this big, beautiful bill that was passed a couple of months ago has a lot of stuff in it. Some good, some bad. Obviously, we don't have time to unpack it today, but what I'm gonna do is unpack a couple things in the bill that I think are advantageous and helpful to homeowners, investors, the real estate market, the mortgage industry, specific to the residential side on buying houses, and I want to discuss this with you guys today. So a lot of times when people are out there buying properties, their instinct is just to look at what's the price of the house, what's the interest rate, what's my monthly payment, what's going to be the return on my investment, how much is this property going to appreciate on average per year, and these are all good things. But tax law and new legislation can help or harm certain industries. With the big beautiful bill specific to mortgage and real estate residential, there's a lot of things in there that are very, very helpful to helping people make a decision when buying a home. Primary home, second home, investment properties. So as we start to unpack the benefits of the big beautiful bill, I'm gonna go through a few things today that I want you guys to pay attention to that might change your mind and help you with the decision on buying a house. So one of the most popular and helpful things in the big beautiful bill that's helping potential future homeowners with their decision making and buy a house is bonus depreciation. Now, bonus depreciation is really a big tax strategy that helps people maximize their tax deductions and lower their tax exposure. Now, obviously before the beautiful bill was passed, bonus depreciation is always something that people that are buying properties that are non-owner occupied or even partial rentals are able to depreciate some of the property. This effectively lowers their overall taxable income with the IRS and has less tax exposure for them, which means they keep more money in their pocket. So bonus depreciation is nothing new, but the difference between the previous law and the new BBB law is that in bonus depreciation in the past, you were only able to take a portion of it. Obviously, I'm not a tax specialist, but I think it's something like 60 or 70% of the depreciable basis. And obviously you could take that over a course of maybe like 10 to 20 years. And so you had to spread it out. If your depreciation baseline was $200,000, you may be able to take 60 or 70% of that. Obviously, you could take a piece of that and spread it out over a certain amount of time, or you could take some of it up front. It still was beneficial and advantageous to the investor out there, to the part-time investor. But what the new BBB did is it allowed people to do 100% bonus depreciation and take it all year one. So let me give you some simple math just to explain what that means. Again, this is just a hypothetical on example, but the way you calculate a depreciable basis is you take the value of the property and then you separate it and you say, what is the value of the land? What is the value of the structure? The value of the land cannot be included in this equation, but the value of the structure can. So let's say you have a $500,000 house. And let's say, for instance, the land value is $100,000. The structure value, which is the house, is $400,000. Your depreciable basis as a starting point is $400,000. Now, the old bill said, hey, you can take maybe 60 or 70% of this if it's a rental property, a non-owner occupied property, and you can take little pieces of this each year as depreciation on your tax returns against the property. And what we'll do is it'll bring down your overall tax liability, because obviously depreciation is a solved cost, it's a paper loss, but obviously it helps people when it comes to tax exposure. This new bill would allow you to take that $400,000, take 100% of that and take it all in year one. Now, why it sounds too good to be true, and again, I'm not a tax specialist, what it does is it gives people a lot more incentive to buy properties, not necessarily because of the value of the property, not necessarily because of the interest rate, not even necessarily because of the cash flow, but because of the tax laws. So if you're able to take 100% bonus depreciation on year one and use that loss, that depreciation, that paper loss to offset your actual income and your real earnings, obviously you would have a lot less tax exposure. If you owed income taxes, you would owe a lot less. If you already paid your income taxes in, you'd probably get a lot bigger refund. And what people are doing is looking at the big picture and saying, wow, with this new tax law and the big beautiful bill with 100% bonus depreciation, I'm able to take all of the depreciation. I can still spread it out over a course of time if it benefits the taxpayer, or I can take it all up front. So it allows you to deduct a whole lot more. It allows you to do it all up front, which obviously saves people a lot of money and keeps a lot more money in their pocket. And so outside of the specifics of the property, the deal they can get, the contract, the interest rate, and the payment, this bonus depreciation, 100% of it being able to be taken up front, is a game changer and will change the way that people look at buying properties in the future until things change and a new law is passed. So that's the number one thing. The number two thing that I really like is the SALT tax. The SALT tax gives people the ability with businesses and potentially on property taxes to where they say, hey, you can deduct more than what was currently allowed. I believe the maximum on property taxes that were allowed to be deducted was up to $10,000 in property taxes a year. Not a bad thing, but let's say you own a property where the property taxes are $25,000 a year. Well, with the old law, you can only deduct up to $25,000. Now, obviously, this is all with the assumption that you don't take itemized deductions, that you take maximized deductions, obviously, which would include the property taxes. But if you've got $25,000 in annual property taxes, the old way, you can only, I think, deduct about $10,000. The new way, you can deduct all $25,000. And I believe the projection for the cap on this is $40,000. So again, it helps the people that have a more expensive home. Their property taxes exceed $10,000. In the past, you could only deduct $10,000 of that. Now that this is obviously a law and retroactive to 2025, but those people that have property taxes that exceed $10,000, but I think don't exceed $40,000, you can deduct up to $40,000 in property taxes. And again, more deductions, more savings, more money back in the consumer's pocket. So it is changing the narrative and changing the way that people are able to take advantage of the new tax laws and keep more money in their pocket. So they're not looking at the house as just house price, contract structure, interest rate, and payment. They are taking all of these additional things into consideration, so that way they can look at it as a different style of investment. Because sometimes, again, the price of the house matters, the interest rate and the payment matters, but at the end of the day, tax law, interest deductions, things that keep or put more money back in the consumer's pocket are things that people are now paying attention to even more. Not because they didn't in the past, but obviously with these tax laws improving the position of the consumer, improving the position of the taxpayer, and allowing people to take more tax deductions, it keeps more money in their pocket. And now obviously it appears that buying a house is going to be a better investment than ever, not only because obviously over a long period of time, houses continue to go up in value, you get tax deductions on the mortgage interest, you get tax deductions on the property taxes, but the new big beautiful bill allows you to take even more depreciation in a shorter period of time, and it allows you to deduct property taxes upfront exceeding the previous amount, which was $10,000, and I believe again up to $40,000. Full disclosure, not a tax specialist. If you got any specifics about this, obviously, talk to your CPA, your bookkeeper, your accountant, but these are along the lines of what this big beautiful bill specifically to buying properties and mortgage interest and all these things are pointing to. And obviously I think by the end of this year, it'll get a little bit more clarity, but I've had some conversations with a couple tax specialists, and it appears like these things are in place. These are going to be big benefits and obviously change the way that people buy houses, look at houses, and take the overall return on investment and tax deductions into consideration now that the bill has been passed and these additional helpful tax incentives are currently in place. So listen, if you found this video useful, drop a comment below, like, subscribe. If you know anybody that could benefit from this information, feel free to share the video. And if you want to have a conversation around the big beautiful bill, tax deductions, your home buying journey, or even around just getting pre-approved and have a conversation with myself or the team, do us a favor, call us, email us, text us. We're always here for you. Until next time, stay tuned.